All right, happy Wednesday morning. It's what is it? 6:34 on Wall Street. About 3 hours before the open of trading. It's time to get your global macro on. This is QuantBox Live, where we uncover the best fundamental opportunities. Get your trading day squared away. Well, what we want to do with QuantBox is look at the long-term fundamentals, but also look at short-term, right now, real-time market sentiment, and then be able to align them. One of the things that we want to do is uncover the underlying intrinsic trend. Obviously, if you're able to do that, you're able to let your winners run. Kind of hard to let your winners run if, well, there's no trend to carry it, right? So right now we've been shooting at rabbits. So cool, right on. So what we want to do is organize our thoughts. Now this is an old screenshot. Right now we have a couple of things bullish, a couple of things bearish, and everything else is neutral. Well, it's good to know because you want to align your trading with, well, reality, right? And so that's why we use things like scatter plots. We use things like risk gauges. Pretty cool stuff. So if I happen to upload this to YouTube and you're watching it on YouTube, why don't you swing by quantbox.co? But be careful, it's going to cost almost $8, and trading is risky. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Boop, boop, boo, boop, doop, boo. Let's go to the pro. Let's go to the pro. The QB. Huh? QB or not to QB? That's the question. Mm-mm. The ghee is good this morning. Okay, let's take a look at what we got here. Yields are about the same, but again, not going in the wrong direction. So that's good. That's neutral to maybe ideally risk on. Oil's down a little bit. Good, a little reprieve. The thing is, that's what you might be looking for if you're a bull. See, if you're a bull, you want to see red on the screen so you can buy the dip. So is 80, 81, are these areas of opportunity for you? You want to take a look. Gold is above 2200. Well, we've been bullish on gold since what do you call that silly little holiday? Valentine's Day. Yeah. Another excuse to buy candy. Great. Anyways, S&P 500 hanging tough. Okay, hanging tough above 5,200. All right, cool. Not much changing on euro dollar, and Bitcoin back below 70. Jim, oh, you like the candy, huh? Yeah. It's hard when you're diabetic, you know? Oh, yeah. Well, see that some might call that chocolate versus candy, but in Europe that is not legally chocolate. But you're American, you're like, I would, right? Yeah. You need American chocolate. Yeah, okay, good. Yeah, but it's good. Yep, that's true. All right. Yeah, you know when you're diabetic and you can't eat a lentil soup because it's too sugary on your body. You're like, what's like chocolate ice cream like, huh? Yeah. So if you had to choose, Jim, a chocolate bar or lentil soup, you're like chocolate bar all day, every day. Well, don't become diabetic. Yeah. All right, cool. So anywho, risk off. This I think this was risk off yesterday, but I think it was a -2, not a -3. Interesting. VIX still very high. S&P 0. Yields 0. Dollars 0. Yen futures up slightly. So it gets a -1. Okay, gold up. Remember, I score that as negative. I score this as negative because I say you only want to buy it if inflation is going up, and that's generally a bad thing. Now, in times when you have high GDP, that might be an okay thing because the productivity is higher inflation, and that's why there's excessive demand. Yeah, I don't know. I could change this model at any time. I just have to ping a developer. But the thing is, we don't live in that world right now, right? Remember, if you're worried about losing your job, you don't go out and buy a new gold watch. Mm, unless you're filthy, stinking rich. And it's a great time to buy a gold watch from someone that's selling it to pay their rent. But anywho, a little risk on here on the longer run, little risk off on them, so still quite mixed, but maybe something's coming around. My point here is if you scored gold differently, you would have it more like ever so slightly risk off. So maybe something's happening, maybe not. Maybe it's noise. It's okay, but you got your eyes on the prize. In particular, oops, you should watch these individual asset classes and see how you feel about it. Okay. Now, a double in volatility is a big sign. Now, is it really a double in volatility? Well, what's actually happening in VIX is related to this S&P 500, and as we know, it's very topish. For VIX to double, what's happening is institutional investors are buying options to hedge the S&P 500, specifically the S&P 500, not the DAX, right? Not the FTSE, not the Dow, the S&P 500. So there is a stampede of people hedging at a top. So that's interesting, right? Yeah. Yeah. So remember, understand what these numbers mean. And you're like, oh, people are hedging with a vengeance. Just doubling since last week. That's a lot, by the way. That's a lot. Yeah. How about this, Jim? You put lentils in the chocolate bar. I bet you it wouldn't change the chocolate, the taste at all, but you'd get some good old legumes. Yeah. Yeah. So you'd be healthy. Yeah. All right. So what's going on? Bitcoin down now. Remember, Bitcoin was way up, biggest winner. And then all of a sudden now it's the biggest loser. I think that was a TV show, wasn't it? Um, Oops, I want to get rid of the crypto to smooth this out. And what do we see? What is the slope of the mean? Does it look something like this? Okay, that's good. There's quite a bit that's you might argue it's more like this. So the way you interpret this, one is, bullish, the other one is neutral. So maybe somewhere in between, right? You're like, well, it's sort of this, sort of that. All right. We're just looking at the slope. When you get beyond sort of first level graduate school, then they start doing like weird curves like this. And they're like, oh, like, no, no, don't do that to me. Um, but anyway, so I don't want to make it like this. You want to have a slope. And so, yeah, I could see your slope is more like that. But it's generally good. Everything in these quadrants are good. Okay. So if you want to make it look like infinity kind of thing, all of that is good. This stuff is a big question mark. So then we can try to figure that out. Or which one is the lucky one? The ones we expected or the ones we didn't expect it? And you see pound, 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 pound. There's a lot of pound over there, huh? So pound is having a good day relative to what we would expect. So that's the outlier, if you will. There's a pound here as well. Okay. So pound relatively strong, but for a pound pair, we would expect them to be down here in the bearish zone. So they're having a good up day. So maybe you focus on that or you avoid it. But at least you know about it. Okay. Taking a look at the economic calendar. Okay, Waller speaks. What if tomorrow's going to be a big day? Tomorrow there's no QuantBox live. Okay. And then this market is closed, so there's no QuantBox live. The next QuantBox live will resume on the 4th of April. Just FYI. If you're in my investor boot camp, those sessions will go as normal. Okay. Just FYI. Boo. What else? So, anyways, Thursday is a busy day. And the funny thing is, the most important thing is when the market's closed. What else should we kind of look at? We should probably reconnect with the scorecard. Okay. DAX is still red hot, smoking hot like fire, right? We have euro pound as bullish, but I think today it's neutral. So both euro and pound are strong. Oil still a 7, and oil's down today. Maybe it's an opportunity. Okay. Dow is a 6. NASDAQ is a 5. And then we're neutral. If you're not sure what direction these have been going, well, you get emailed if you're part of the QuantBox AI alert service. I imagine by the time I'm back next week, we will be hooking up the actual text. Just so you know, we've been testing the text messaging service, so we're that close now to launching that. So when I get back, what'll happen is the price will go up. So anyway, sign up if you're going to do it. A lot of interest in Ethereum. Copper. Good. So the developers have worked on this without letting me know because I don't remember some of these assets. And of course, that means they're not working on the things I asked them to work on. Nice. Come on, kids. It's like getting your kids to clean their room, huh? They're just like that. Anything but do that. So, anyways, big move in copper. Okay, cool. I like that. Do I actually care about institution or retail copper bias? Probably not. And is there any institutional copper? No, of course not. So, yeah. All right. Thanks, kids. Look at that. Is that even true? Could that be true? Could that even be true, huh? 82% of retail traders are short the DAX and QuantBox is heavily long. That's interesting. This is the one I look at all the time. And right, typically when this is coming down, yields are coming down. That means money is flowing towards treasuries. and we now have a negative slope, which is really nice. And we have yields projected to come back down towards 4 in the next 7 days. That would be really good. I'm sort of doubtful of it. That seems like too much, but I guess too much relative to what has been happening. If you measure this, I mean, statistically, there's no level of inaccuracy. Like that is the slope, and if you did the statistics, that would be the projection and the standard deviation. So very cool. That would be very bullish. I wonder if that's actually going to happen. That's a bigger question, right? I wonder if that's going to happen. So you can go to price forecasts and get a better look at it. Just that I couldn't get. You guys remember Tommy Boy, the movie from the 90s? I said you can take a look at this, and then I get that quote from Tommy Boy. You're like, you can get a look, you can get a good look at a T-bone by shoving your head up the steers. Meh. But I'd rather take the butcher's word for it. Anyways, let's take a good look at yields here. And oh, we are still above the average, huh? So that's why I've done this. And that's a 20-day simple average. So it'd be interesting if that actually came around, huh? So right now, my instinct is it wants to go back up or at least move sideways. And then, the let's say the 20-day moving average just gets flat and we kind of start coming, you end up getting the average, right? At some point when the average flattens out. And therefore, if it's flattening out, price, or in this case, yield isn't going up or yield isn't going down, it'd be yield would be flattening, and then the projections would flatten too. And that's kind of would be my guess. But I do want this to head down. That'd be good. That'd be risk on. And that would be, people pricing in a Fed cut soon. Now the 2 year is more sensitive in the very, very short run. Um, but as far as the yield falling quickly, the velocity of the yield change, um, but on the long run, the sensitivity to the interest rate changes by the Fed, you do better on the 10, 20, and 30. In fact, if you measure something called convexity, which is the sensitivity to the change in the yield, my calculations tell me the 20-year is better. That's why I'm on the 20-year treasury instead of the 10. 10 is good, but 20 is more. And then 30 gets a little more complicated because people buy it for different reasons. So I find that the 20, when you do duration analysis, the convexity of the uh, yield curve is best, which just simply means if if you had a 2-year investment that was sensitive to interest rates, meaning if the Fed cut interest rates, well, your percentage return also falls. Yeah, but if you're talking about a 1/4% or a 0.5% over 18 months, like when it comes to dollar for dollar, it's very, very small. Well, if you looked at that same cut, but instead of 18 months, it was 18 years, you've lost that same amount of money year after year after year after year after year. Well, the absolute amount of money that you've lost because of a change in interest rates will significantly bigger. But then imagine the sensitivity of the price is also bigger. So not only is it compounded 18 times, but each one is bigger than the change on the smaller. So, anyways, When you're doing bond math and bond analysis and you're trying to make investment decisions, that's some of the things that institutional investors would do. And long story short, the 20 seems to be the best, in my humble opinion. And if we do anything like this, meaning this is the new peak and we stay we stop making, let's say, higher highs at the very least, then that would benefit where I've allocated resources in the treasury market. So the 20-year. Now, you could also probably improve that a little bit. My analysis was fairly crude. You could probably blend a portfolio of 10 and 20 and get and average your duration to about 15, and you might have a bit of a sweet spot as well. But who's got time for that, for crying out loud? See if this is updating. No, didn't think so. It's dead. So maybe I'll turn that off if I can get time. Yeah, but this is still negative. I've mentioned it, but we're rolling things over. I don't know if you have been playing with this at all. Any of these things. So you're like CAD yen, and you can compare inflation in Canada and Japan. Okay, look at that, huh? Isn't that interesting? You're like, wait, what? Yeah, isn't that interesting? Canada and Japan have the same inflation level. It's staggering. I mean, look, we haven't seen that for, I'm going to guess, like the better part of 50 years, right? Yeah, kind of interesting, huh? And you can play around with some of this too by clicking the actual currencies. I know you'd never guess, right? Uh, yeah, I didn't ask them to do that, but okay. It's cool. Like, you can click the symbols. Okay. Good, good. Anyway, so there's some pretty cool tools here to play around with and see how things are going. So again, you can go to labor market, and you're like, this one's broken. They told me that that's necessary, and I can't remember why because it's stupid in my mind. But ignore that. I'm like, so I'll clean that up. I got bigger fish to fry right now. But anyways, looking at Europe and the United States, this is a way to see how non-farm payrolls has changed. Okay, we had a bigger number. Interesting, right? We went bigger in NFP. We went from, right, 229 to 275. And then you look at Europe, and now you're looking at a month over month change. Okay, negative to there. And then you can see, so very little change. You can't tell the difference. Once again, here in Europe, the unemployment rate shifted from 6.5 to 6.4, but hardly any real change. But it's nice to see how things are changing. In the United States, we were at 3.7. We moved to 3.9. That's cool. Now, the Fed is hoping that this gets into the fours. Not 5, but like 4.1, 4.2, 4.3. And in the models, that's good and allowing them to cut because it changes the impact of wage growth. And then when wage growth changes, it changes headline inflation and changes some of their models and changes the neutral rate. And eventually the Fed could cut and still be restrictive. See, when they do cut, they will stay restrictive. Same thing with Japan. They've said when they raise again, from 0 to, sometimes they'll raise to zero point 0.1, but when they raise again in the future, and QuantBox has pulled out of their analysis, like it could go over zero point 0.5. I think he as high as 0.75. But if they do that, they they believe that it's still accommodative. And then the Fed would be cutting and they would say it's still restrictive. Okay. So cool, and we can see a lot of these. Okay. So this analysis, okay, is good, right? Euro dollar is good. There's a score output here of 2, which goes into some of these other pages. You can quickly take a look and say, how's Australia doing versus Japan, let's say. Okay, the NFP is obviously only for the United States. You can see, okay, you can see here the employment change. Boom. Okay, things are going up. Unemployment going up, which is strange, month over month versus like year over year, though. So the unemployment is rising, which should bring down wages. Okay, a little bit of a color error here. Okay, so we have in Japan, oh, almost no change, it's just stuck at 0. And then month over month, or sorry, year over year, the unemployment rate, which is just amazing, isn't it? 2.4. It's amazing. See, look at in in um in Australia, okay, we have the unemployment rate. Now it's interesting how it's going this way, but 3.7, and in Japan it's 2.4. Like I don't think the United States has ever been at 2.4. Like 3 something is extraordinary. You know, 2 in the low 2s is just it's unbelievable. Um, just crazy, right? Crazy levels of employment. And then we can compare and contrast um these two would be very similar, I think. But if you go to um what do you want? Like pound CAD, pound Aussie. That one's also colored wrong. Um, and we look at this in the UK, okay, losing jobs, okay, not so good. Okay. In the UK, you have unemployment was 3.8, now is 3.9. So people are losing jobs. That's no so good. Then when you look at Canada, about the same. Then you look at their headline 5.7. Remember, Japan is 2.4, 5.7, and climbing. So overall score in that case, these two, right? Negative. So, anyways, excuse me. You can play around with that, see if you like it. One thing I'd like to look at is oil. Oh, I put the moving average on this chart. That's nice. I like that, huh? So we had a bit of a dip today. And remember, this is a daily chart drawn quite some time, right? Like this projection was based on the aggregate here. And it says if it drops to 80.24, you're probably in the business of buying dips. Well, we're below 81 right now. It may have dropped closer to 80 and a quarter, but it's saying, they're based on the slope of the mean, there still could be a buy a dip scenario. Okay, so we're we're at the end of March and moving into April, and April and May tend to be quite good months. Okay, on the 5 year and on the 20 year, it's pretty by the by March you should well in March you should be buying oil with the anticipation that April's up. And of course we've had that big move, but that's what you should have been doing sort of the middle of March. We were at 77. And now you should be thinking, are we on our way to okay, this is a pullback to 80. Is the next move 90? 95? Well, I don't know. What's your opinion, right? So you got all this information. And the seasonality suggests, yeah, maybe think about buying a dip. You're like, well, how can I get a better look at that seasonality? I'm like, oh, good question. Let's do that. We can look at oil. Okay. So March is a buy a dip month, March to April. Okay. There's a downward period. And then by April, you should be already up. What explains this? Well, it has to do with the seasonality of producing gasoline. We need a lot more gasoline in June, July, and August than we do in other months. So, in anticipation for that, you have to make the gasoline. Guess what? It doesn't come from the gasoline tree. Okay. You got to get some raw crude oil. Okay. And crack it and make some gasoline. Okay. In the early days, you would crack it to make kerosene. And I'm talking about the, mid 1800s, 1830, 1840, 1850. Rockefeller, he wasn't an oil man, he was a kerosene man. And so the one of the byproducts of gasoline in 1840, or sorry, the byproduct making kerosene in 1840 was gasoline, and they didn't know what to do with it because it was volatile. It could just explode into flames with just a spark. So they got rid of it. They probably dumped it in the lake. Just dump it in Lake Michigan. Okay, fine, right? Um, yeah, and then it wasn't until later that we found a use for it, and that was the automobile. Yeah. So, anyways, gasoline, pretty cool, man. Pretty cool stuff. So, if you need the gasoline in June and you have to make gasoline from oil, then guess what? Somewhere around March, refineries start buying oil to make gasoline. Bada bing, bada boom. It's in the training course at Investor Bootcamp. If you want to know anything, or actually everything, if you want to know everything about the oil industry, it's very comprehensive. Even the legal contracts I go through. So anyway, so this might be an up for you. Okay. Yeah, this glitch, I'm not sure, but let's break it down into the shape. Um, let me see what week of the year. Week of the year. What is the current week number 13? So yeah, we're in here where we're on average, let's say, we're at the bottom of a market that tends to want to go up, generally speaking. Now, again, I don't know what that is. I mean, it is what it is. It's in the data, but let's say that's a sign of goodness. I mean, it's hard to like what's happening there in the data. Is it a mistake or is it truly big? But we know this is true. I know this is true because I've been trading that for 20 years without the QuantBox knowledge. Now that we have QuantBox, I can show the demand increase. What's going there? I don't know, but whatever. By then you should already be long. Let's say that's true. Let's say that's not a mistake, and you knew that there's a huge order that's going to come into the market in the next 5 weeks. Well, you should front run that sucker, right? You should front run it. So whatever. We're heading into April, and you should probably already be long. And according to this, okay, we peak out around week 27, which is probably right around June, July area, right? So cool. So now you got something that could last months. You're welcome. But again, that's something I've been doing for as long as I remember. And my research, even back then, and I'm thinking around 2007, 2006, we did research from downloading data from the EIA, and it went back 50 years, which, is a fair amount of work. And our research then said June, on average, going back 50 years, was the top of the market. Now, that took a long time to get that data and then go through and analyze the data and crunch it. We had a quantitative analyst at FX Bootcamp, Kurt Worley, who literally did the research. And we came out June. I mean, I'm telling you, 2006, 2007. And now with QuantBox, it's like easy peasy lemon squeezy. Okay. So, anyways, very nice. So, what am I getting to? What am I getting at? Just speak English, Vane. Okay. Oil's down. Are you a bull? I don't know. Will it go up? I don't know. Okay. But you have to have an opinion if you're going to trade it. So we can look at my WTI. Now I put an X there and I stopped the whole market. Sorry. Okay. Okay. Sorry. Just doing my job. So what are you going to do next? How are you going to read this chart? See, if you were trending down, you would sell this rip, wouldn't you? If you're a bear? But what if you're not a bear? What if you're a bull? You're like, okay, somewhere around 80, you want to buy it and take it to 90. Maybe 100. Because you also know if you can catch a bid here, historically speaking, there's another 12 weeks of up. 12 weeks of up. Well, this is why I say QuantBox can give you the confidence to let your winners run. If you knew, maybe that would be helpful. Also back here, do you remember? That's the middle, okay, of March, and you already knew seasonally March looked like this and April looked like that. And that's why, and even back then, I have it all boxed in and priced out for you because that is the logic of At what point, if you were expecting to be a bull, are you going to become a bull? And do you have the guts to hold it till June or July? Okay. Well, if your stop was at break even at 77 or 78, you might feel confident right now. So the bigger question is, what are you going to do in this zone? Are you looking to buy or are you going to allow it to fall? You have to make decisions. Are you a bull or a bear? And I think today is interesting. Another pullback to 80. And statistically, we also know 80.25, which is just above this. So 80.25 is about here, is one standard deviation below the mean, measuring the last 20 days. And it's projecting, well, I guess it would be like this. QuantBox is projecting something that looks like this. Mm, mm, mm. So, what are you going to do? One of the things you might want to pay attention to is the April buy zone is here. Both of those are buying prices. Anywhere in the zone is acceptable. So now you start saying, well, how do I handle this zone? As you're approaching this number, you have permission to look for bullishness. And if you get it on a 5-minute chart, you become a bull. And then if it breaks down, you take a walk. And maybe by the end of this week, we're staring at 79. And then you look for short term charts, 5-minute, 15-minute, to turn bullish. And if so, you buy it because the whole time you're a buyer because you've done your analysis. So even if there's red on the screen, you're waiting for your turn to buy because the red only gets you a better price, but it doesn't impact or influence your bias because that is set fundamentally with the help of QuantBox. So let's say we're pretty close to that 80. Okay, that 80 price, 80.25 is the actual number, but we don't care about that level of specificity. But you could be sitting here and say, at what point are you a bull? Now, if I was in my scalping mode, I would have become a bull right here, which means I now have permission to buy dips. If I want, I can start trying to do stuff like this on a filthy, stinking, no good, lousy 5-minute chart. I don't care about this 5-minute chart. I care about the 20 years of data that says 2 weeks ago you should have been buying oil. And a week ago, you should have been buying oil. And this week, you probably should be buying oil. And next week, you should be buying oil. And the week after, 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 and the week after. You're like, whoa, whoa, whoa. It just doesn't mean every day. But this is one price that is a solid, absolute, total maybe. And that's how you become a trader. Amateurs look for the 9 reasons to confirm that it's absolutely gonna make money. You're never gonna find that. So this is 100% guaranteed maybe. So what are you gonna do about it? Okay? At that point, it's tactics. Okay? Okay? Cool. Now, a while ago, okay, TRADARS, and this is way back when I was beta testing the service, TRADARS gave us a February setup which would take us from the low 70s, low to mid 70s, all the way up to 84. and we're ever so slightly still climbing. We got to 83 and a half, and we're still riding that 21. So look, if you end up buying it today or tomorrow, you end up just buying it off the 21, and you're probably going to get it to 86. And this trade plan, okay, from December, January, okay, February. Okay, look at this. December, January, February. If you know your pivot points, these are all very, very clear buying opportunities. You just had to know, you just had to know that springtime is a good time to buy crude oil in anticipation of the of stockpiling of crude by refineries. Well, how would you know these things? Go to Investor Boot Camp. Watch the training course on oil. Look at seasonality inside a QuantBox. It it's there. And so now we're all the way up here. The thing is, will it keep going? Well, history doesn't predict the future, but history says yes, it will keep going. So therefore, are you going to buy a pullback to this daily 21? Well, that's for you to figure out. Okay. So we see in the past, okay, this is counter trend. And then this is an M2, and this is an M2, and this is a central. This would be a central, and this is the M2. I've already highlighted that. So I'm just saying, sort of a repeat of this, and a repeat of this, and a repeat of this, and a repeat of this. Can I have a potential similar pattern here? Can I, is it too bold to say somewhere in here is an opportunity to buy? I think it's Pitbull to say, "I'm old, but I'm not that bold," or something like that. Whatever Pitbull says. Um, there it is. Oh my gosh. That's how you use the QB Pro. My goodness. What a good day. You guys feel good? Feels like the markets are going to treat you well today. So I will see you over at Forex today in about window. I don't even know when I start. Is that 8? I guess in a half an hour. I'll see you over there. Peace on earth. May the pips be with you. May your profits be above average. Again, it'll be about a week before I see you again for QuantBox Live. Okay. And if you're a member of Investor Bootcamp, things will continue as normal. Yeah. Cool. So, peace on earth. May the pips be with you. May your profits be above average. See you soon. Cheers.